what's up, all of you beautiful subscribers? Welcome back to the Chapple Show. Are we in a tech bubble? We're going to talk about that today, inspired by an article. We're also going to be talking about a pharmaceutical company that went up 24% in one day. We're going to be talking about a potentially big cable merger. Also, our stock market winners and losers. This is going to be a shortened edition of the business news show because I have a place I gotta be, and so there's still a few hours left in trading and potential business news that I'm not going to cover, so my apologies for that. Things can change. Anyways, are we in a tech bubble? And this was interesting because it was inspired by an article that essentially said the tech sector is at prices it hasn't been since 2000. That was one article. And another article said that finally it's recovered, the tech sector has recovered from its losses 17 years ago. And so here's my opinion on this. We're going to bring up this XLK stock. So XLK is a stock that one of the very few that has tracked the S&P 500 tech sector over the past 20 years. So this XLK ETF from Spider opened up at $32 a share in 1998. So right when the bubble essentially kind of started forming, I guess. All right, actually kind of started really forming a little bit after that. So opened up at $32 a share. And then at its peak on March 24th of 2000, it hit a price of about $64 a share. And then right when the bubble bursted, so it was at $56 a share right when the bubble bursted. Right when it went from $56 all the way down to $11 per share. And keep in mind, this is just the one essential ETF tracker we have. So again, this doesn't just judge the entire tech sector. It's just some of the big companies that were around back then. Now, currently, remember, right when the bubble bursted, it was at about $56 a share. Currently, we're at $57 a share for this one stock here. And so here's my opinion on this. We're going to take a look here at what happened during these times. So the dot-com bubble, if you look at the charts, it essentially went like this. The stocks just shot up within I can track down the day. On October 22nd, 1999, from October 22nd, 1999 to December 17th, 1999, share prices increased by about 30% in 2 months. 30% in 2 months. We've actually seen something similar to that recently. And over the course of from October 22nd, 1999 to March 24th of 2000, they went up 60% in the tech sector of the S&P 500. So that's a little bit scary, right? Because we've seen similar numbers. I mean, keep in mind here from, let's see, we're going to track from January this year, I believe. From December, roughly December. So from December to July to today, July 19th, it's gone up roughly 20%. So that's perspective for you guys. So within a 6-month span, the tech sector of the S&P 500 has gone up 20%. In current day and age, and meanwhile in the dot-com bubble it was closer to 60. So that's the very first thing. The tech bubble went like this, and if we are in a tech bubble, ours has gone like this. Here's what I will say about this. We're also going to take a look at PE ratios actually. I want to take a look at PE ratios. And so what scares me is, yes, this spike in prices, that scares me. That's a bubble. When something goes like this, it might be bubble forming-ish, but I don't know if it's a bubble. We're going to take a look at PE ratios. For those of you that don't know what a PE ratio is, it's price to earnings ratio, meaning that it's the price of a stock divided by its earnings. And so by earnings is essentially profits, okay? And so what that usually means is how much money the investors are willing to pay for the earnings of a company. Essentially, what is the future potential of a company? That's usually what a PE ratio, that's what I take it as. And so in the year 2000, at the peak of the dot-com bubble, PE ratios were 44. We're at 44. So people were willing to pay 44 times as much for every earning dollar. So for every dollar a company earns in profit, people were willing to pay $44 for that stock, which is absolutely ridiculous. Ideally, that ratio is about, 7-ish in the stock market. Now, currently, the average PE ratio is about 22 to 24 right now. And so, but keep that in mind. Because PE ratios, remember what was happening in the dot-com bubble? Does anyone remember? Well, I guess I was a kid, but I've read up on it, obviously. So what happened in the dot-com bubble was a bunch of tech companies and, you know, internet companies, they were getting tons of money for future earnings. People wanted to, because the internet was all exploding and all this stuff, people were dishing out millions and millions of dollars to these companies that hadn't even started. They hadn't even made a sale yet. So that's what was happening with a lot of the public companies in the stock market. I mean, companies that hadn't turned a profit yet were getting millions and billions of dollars, and they failed as a company. Because guess what? You got to turn a profit eventually if you want to be a sustainable company, i.e. Tesla. So anyways, my opinion on this is, are we in a tech bubble? I mean, if we are in one, here's how you should think of this. If we are in one, this is a very slow forming bubble. And it would only be for a select few companies. And I mean, you know what, we're going to take a look, we should take a look at some companies here. I mean, Amazon. You guys know that I personally like Amazon as a company. I like what they're doing. They're taking over the world. I mean, is that a good moral thing? I don't really know. Should it be stopped? Are they becoming a monopoly? Like, that's a whole different question, right? But are they going to fail tomorrow as a company? No chance, right? They are a company which they have billions in revenue, tens of billions, 100 billion in revenue, whatever. They have 60 billion in revenue. I mean, they're not going to fail. They're not going to go bankrupt anytime soon. And I think that they have a PE ratio of 193, which is obviously one of the highest in history. And compared to the PE ratio 40 that some tech companies had in the 2000, like, I mean, a lot of these companies are proven companies. They are very overvalued, but they are proven companies that are overvalued, that will not go bankrupt. And so are we in a tech bubble? I'm going to say we are in an overvalued bubble, okay? We're not even in a bubble. We are in an overvalued period right now where we may see a dramatic drop off in a lot of companies like Tesla. We saw that in Tesla recently. They were down 20 or 30%, right, in the past few months. And so I think we're going to be seeing a lot of downturn soon in a lot of those overvalued companies, but I don't see like a super duper crash coming in the next 2 months, if this is what I'm trying to say here. I think if we were in a bubble, I think that the bubble is forming right now. I think that it is something I've always said, that the stock market is probably going to take a downturn or a crash by the end of 2018. So that is my timeline. I don't know if it'll occur sooner than that. It doesn't look like it's going to occur sooner than that. But actually, the one stock that does kind of scare me, if you were to look at Amazon stock as a history, they are very bubblish. Their share price was at $332 in 2014, and they've gone up 208% in the past 3 years. So I don't know. Are we in a tech bubble? I would say no, but we are forming one for sure. If this keeps going how it's going. I mean, we're seeing Tesla isn't a good example of that company. Doesn't turn profits and has a valuation of $55 billion. So, I mean, you know, take what you will from that. So, are we in a tech bubble? I would say no. We're going to move on here to the next topic. The next topic I want to talk about is Vertex Pharmaceuticals. They've been releasing drugs and testing drugs to treat cystic fibrosis. So cystic fibrosis was something that I was worried about because I had a period in my life where I was going through organ failure and I couldn't breathe. And people thought like potentially this is cystic fibrosis kicking in here. That was an option at the point, and now it wasn't. It only took one test to not do it. But cystic fibrosis, pretty much what happens is fluid builds up in your lungs. So fluid builds up in your lungs, and it's a genetic disorder. There's no bacteria or virus that cause it. It's just you're born with it. On average, people with it only live to 38 years. And so it's a really terrible disease. And so what happened was that this company, Vertex Pharmaceuticals, they've been doing a lot of drug treatments. I think that they have 7 or 8 of these out now. But their latest one is a treatment that involves a combination of 3 different drugs, I guess. And it's in its early stages. I think it's a phase 1 trial right now, but it's already showed that it's improved the lung function, the lung capacity function of people that have cystic fibrosis by 9%. And for those of you that don't know, 9%, it may seem like a small number. Okay, but as someone who at one point for a span of about a year, or even 3 months where I couldn't go out for a walk because I couldn't breathe, I mean, 9% is the difference seriously between you staying in bed all day and being able to go for a walk. or being able to go for a nice walk and a light jog. I mean, that is a big difference in the quality of life for someone with cystic fibrosis or with breathing problems in general. But this is cystic fibrosis right now. And so now here's the thing. So the stock, because of those results that got released yesterday, the stock shot up 24% today. And currently that number may change, I don't really know, but up 24%. Here's the deal, is that I could not find the study on this. And usually when someone releases a report like this and the stock shoots up, I can find it. I can find the empirical study, because I like to look at those. That was when I went to university, that was my thing. I had to go look at essentially 200 science papers. I was in health sciences prepping to be a doctor, and I looked at tons of these studies. So I can see how media can skew these results. I could not find it. So I don't know, maybe this was only 9%, maybe it was only for 5 people that they tested, or 25 people. That can skew results, especially if one person's lung function improved 50%, and then some of the other ones it was only 3 or 4%, or some it was 0. I mean, I need to actually look at the numbers here, but based on Wall Street's release of this number, the stock shot up, and you know, here's the deal with this, is that I really don't like how, you know, just one little scientific study can shoot up a stock's price by 24%. I mean, I don't really like that aspect of the stock market, because those are the type of people that bet with their money. Those are the Wall Street bettors that I don't agree with how they invest whatsoever. Actually, we should bring up the stock here. So Vertex pharmaceutical stock here. So yeah, their stock's gone up 21% today. And it's just, I don't know what to think of it. I just really don't like it as an investor. I do like it as someone who, you know, if that study is true, I hope it is, and I hope the drug goes out to the 75,000 people that are affected with this kind of cystic fibrosis. That was what they talked about, was that they are essentially they found a drug that can treat people with cystic fibrosis that normally cannot be treated with other cystic fibrosis drugs. So this is a very select group of 75,000 people in the world that cannot be treated with any other cystic fibrosis drugs. So I'm very happy. I mean, if this can extend the average lifespan from 38 years old to even 42, or get an extra few years, I mean, this is really big. So I seriously hope this study is true, and it's big business news, and I always like positive news. So it always shocks me when Wall Street just overbets on all their drugs. So yeah, man, the stock has gone up 91% since December, 116% since December. I mean, well, anyways, good for the company. Hopefully all of this pans out and that it actually is used in a good and ethical way. So we're going to move on to the Scripps Network. So this is a big cable merger that is happening. So Scripps Network, like, what the hell is it? I know you guys probably don't know what it is. So the Scripps is a cable network that owns HGTV. I can't pronounce the HGTV. Also owns the Food Network, the DIY Network, Travel Channel, Cooking Channel, and a handful of other channels. And so a bid kind of broke out for acquiring this network here. And it is alleged that the Discovery Channel is going to buy them out. So the Discovery Channel, I don't know we don't have any numbers yet, but allegedly they're going to buy them. And because of that, the stock has shot up 14%. Excuse me here. So Scripps stock has shot up 14%. So obviously Scripps stock and Vertex stock, they are two of our winners, stock market winners of today. I don't really have too much to touch on. I'll update you guys if the deal goes through. But Scripps is a big winner today. So good job. Now you can watch Animal Planet and freaking Food Network in the same cable package, maybe. So we'll see. Anyways, we are going to move on to Actually, I know that's not how that works. The cable channel stuff. USA is really weird. Net neutrality. What? Who said that? Okay, losers. Stock market losers. We're going to move on to the very first one, which is Northern Trust Corporation. Hopefully this will update here in the next few seconds. So Northern Trust is a financial services company. It's in Illinois. I believe that they actually have a headquarters or something in Toronto, actually. I thought I saw them in Bay Street. I don't really know. But they went down 9% today. So why did Northern Trust go down 9% today? Get this. See, this is what I always hate about Wall Street. This is something I hate. So compared to last year, revenue and profits went up roughly 2 to 3%. for this company. We're talking about a company with a market cap of $20 billion that had a 2% increase in revenue in the past year. That wasn't enough. Wall Street expected more. And so they only had an increase of 2% over the last year. And so because of that, the stock went down 9%, even though the company's been improving. So 2%, think about that, 2% in additional revenue. Let's say the revenue of this company is what? So the earnings of this company is $1 billion, right? Okay, so that, I guess that's not too significant, but they increased their profits by about $20 million. Because I guess that their earnings will be about $1 billion, right? So, but they didn't have enough of an increase in profit, which is really, really strange. So the company went down 9% today. Again, if I were the owner of that company, I'd kind of be a little bit mad. I understand the growth for a lot of those companies should be closer to 3 or 4%, especially a financial institution. But, oh no, their revenue's $5 billion. Okay, so their revenue's $5 billion and it increased by about, we'll say 2%, meaning that it went up $100 million and that wasn't enough in the past year. That's stupid. Okay, we're going to move on here to the next stock market loser, which is W.W. Grainger Inc. So they are down 6.5%. Where can I bring this number up here? I think we're going to try and update this here. Oh, they pay a nice dividend here. They pay a 3.13% dividend. Now, hopefully this will update, and it has. Okay, so they are down 6.76% today, simply because of this, because they announced that the president of the company is leaving. So W.W. Grainger, they are a, let's see, I have it right here, is a Fortune 500 industrial supply company founded in 1927 in Chicago. They serve more than 3 million customers worldwide with offerings such as motors, lighting, materials, other industrials. So they've been around for a long time. They pay a 3% dividend. They're down almost 7% today just because the president left. That's one of those things which, like, should the stock go down 7%, we're talking almost $700 million? Probably not. But it is one of those things where if the main decision maker in a company leaves, I mean, I could see that affecting the company. I could seriously see that affecting the company. So, by the way, they're one of the companies out there with a revenue of $10 billion and a market cap of only 9. So an interesting company for you guys to look at there. They might be a little bit undervalued. And they've been around a long time here. Let's actually take a look at this. Okay, so they've had a downturn since 2016. I don't know. They're interesting to look at. So we're going to move on to IBM. Oh boy, IBM. Actually, I need to type them in here. So hopefully the stock will update here in just one little second here. They pay a 4% dividend. That's right. They doubled their dividend yield, I believe, because the stock's been tanking. So they are down 4.6% as of this very second. And why is this? Well, let's see here. Oh yeah, that's right. They announced that their revenue has been down 5 years in a row. So now every quarter, I think that every winter their revenue goes up, and then they're one of those companies where they're kind of seasonal, I guess. But their revenue has officially been down for 5 years in a row. Essentially, I think it was 21 quarters as a whole. And not 21 consecutive quarters because they always spike in January, but you know what I mean. Like, it goes gradually down over the past 5 years. And so, I mean, I don't know what to think of them. They have been, I didn't know this, they were around since 1911. I did not know that as a company. IBM's been around a really long time. They were actually building other industrial tech stuff in the early 1900s. So I don't really have an opinion on them because I don't know too much about them, to be honest. They were a giant company in the in the 80s and 2000s, right? Especially the 80s before Microsoft took off. And then I guess things just went downhill from there. So I guess we'll see what happens. I'll keep an eye on them. I do like their 4% dividend. I'm not going to lie about that. And I don't think that they're going bankrupt anytime soon. They're still a $140 billion market cap company, PE ratio of 12. But again, revenue is declining. So I don't know how to fix the company because I don't really know what they sell. We used to sell computer and software and all that stuff. I don't know if they still do that, to be honest. So we're going to move on here. Are they superconductor company, actually? And now I'm a little bit curious here. Anyways, I think that, let me just take a look here, take a gander. Okay, so I found a little bit more information on IBM. They have actually turned into a little bit of a consulting company. They bought a consulting company, and they've been actually branching out into that. They've also bought a statistics company and the weather company. So they're branching out into different stuff here, which is really strange. Also, I found out here that So they have 380,000 employees. Jesus. They have a lot of employees. And they have 5 Nobel Prize winners, 6 Turing Award winners, and 10 National Medals of Technology, and 5 National Medals of Science. So their employees are, I guess, doing a bang-up job, but the company isn't. So anyways, we're going to move on here to the stock market winners. So we've talked about Vertex. We've talked about Scripps. I guess the last thing is oil. Oil has had a pretty good day today. I believe Newfield Oil, or Newfield Exploration, Murphy Oil, Marathon Oil, they're up about 4% each today. And I think that they're essentially the only real winners. Today was actually, you know, we'll take a look here at the big stocks, because I know you guys always like to talk about that. So let's see here. Facebook up 1.6%, Apple up 0.8%. Let's see, anything else interesting? Today, I think all the stocks were essentially just up like 0.5%. Today was just an all-around, a fairly good day for the market, so you guys probably had a good day. Anyways, I'd like to thank you very much for watching. Remember to hit that subscribe and like button and leave a review on iTunes if you do like these videos and these podcasts. So, and remember to check out my stock market program in the link below if you want to see what I'm investing in. And oh yeah, the video I was supposed to upload yesterday, for whatever reason didn't upload. I leave it to upload. It takes like 30 minutes, and then I come back and I hit publish. And just last time it had an error, so I was like, okay, I'm just going home. Anyways, I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.